Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for July 23rd, 2019. And building on Don's video last night, we got a lot of earnings going on, especially on Wednesday and Thursday of this week. Roughly 162 companies will be reporting earnings on this Thursday, the 25th of July. So be ready for it. And like what Don said in last night's video, if you miss this week, these opportunities will be gone. So we're talking butterflies, verticals, or any other strategy to plan your trades into this high volatility, high news, and of course, earnings fueled price movement. We'll first start our look at the markets. We'll focus on individual stocks in just a moment. We'll start with the S&P 500. This is our S&P futures, with the market trading up above the 3,000 index level. That's a key point to note that we have higher highs, higher lows in our rising moving averages, keeping this market bullish. A zoom in shows us another bounce off that 20-day exponential average, and that's playing up to 30.25, maybe even higher than that. One quick note of observation, especially given this earnings expectations and earnings fueled week, implied volatility on the S&P futures has spiked, and that has made our cone of probability or cone of uncertainty with our probability of expiring very wide. So this cone will increase as volatility or implied volatility increases, and it will contract or get smaller as the implied volatility gets smaller. And that's mainly a factor of our probability, or at least the implied volatility, percentage and price functions. That's what we'll be looking at in all of our examples in today's video. Let's just start with a few. Tesla will be reporting tomorrow. So we'll just jump into the perspective of levels. So again, building on Don's video last night and Don's commentary during his session, we'll just look at these daily chart opportunities, mainly focusing on levels, price levels, trade expectations, and where these expected moves take the price. And this will be applicable to, of course, butterfly option trades or intraday trades toward or away from these levels on lower time frame charts. Starting with Tesla, it's had a major rebound from 180 per share, which was a new 2019 low. And that's taken it to 260, which is just above our 250 per share pivot. Going back in time, we referenced just under 300 as the upper pivot, and that is where Tesla shares could be trading in the next few weeks. But we will be watching and trading this $250 pivot. What do the options say about the earnings? They're puffed up. The implied volatility, see, it's not as high as it used to be necessarily, but it is above 87% for this near-term expiration at the end of this week, Friday expiration, which gives us an $18.50 up or down move. So we'll know the stats better tomorrow, but as of right now, the close of Tuesday session, keeping it about 260, takes it up to 278 or down toward 242. Now that happens to be our 20-period exponential average. So zooming in, we can see that either Tesla will, at least by the option statistics, end upwards of this area or down toward this spot. Might not look as impressive on the daily chart, with the lower time frames can give us a little bit more perspective. Again, that will be for day trades to trade away from or short against or up into this 280 per share level or the 240 level, whatever the percent is or whatever the price change begins the next trading session. Next, we'll take a look at Facebook. We'll transition over to its option stats. And again, as the market goes on Wednesday, for those that report after the bell, just take a look what the actual price levels are. And of course, we're watching things overnight, which is right now Snapchat and other names. So Facebook has, we'll start with the chart, this break into 200. So in tonight's video, the strategies are there, the option positions are there, the tactics are there, but we're focusing on levels, focusing on what is expected and what will cause activity and how to position or profit from it or manage risk on lower time frames and the rest of the week. So for Facebook, we are seeing breakouts above this 200 per share level, which is the prior high of 2019. And we're going to have at least with the market here, a bullish support bounce. What levels are we watching? 198, 205, and that's going to be a midpoint level. So what's the expected move, or what's the earnings? Here goes implied volatility peaking, just about peaking, for at least making almost a new swing high for 2019. It has an 80%, 79% implied volatility, which gives it roughly a $13 move. So from here, that takes it upwards of 215 or down to about roughly just about 191, 192, whatever the end of day close or activity takes place tomorrow. So down to the 50 exponential or up to a new high. We can take a look at one example today that was a little bit surprising, but nonetheless explains how we look at volatility. That's taken into account Coca-Cola with a new 52-week high scan, slight pullback, and the earnings today took it up. 0.63 was your announced earnings, and that gapped it up and then pushed beyond 53 per share to close about 54.55. So that generated or created a trend day today for Coca-Cola shares. So that's a thought process if you get these expected moves, the gap and the go. We'll look at Boeing, and that's not going to be too impressive from a short-term perspective, although we are looking at a short sell opportunity. So that's if we weren't looking for earnings plays, or if Boeing did not have earnings coming out in the next session, we'd be recommending and trading an in-out spread to the downside or a bear vertical, buying puts and hedging out at lower levels. The ultimate play would be to expect Boeing shares to trade from 380 down toward 360, probably toward 353 or even 350. So that's just a swing perspective against resistance into a key overhead level. So that is going to generate a short sell position. But wait, there's earnings. I think interestingly enough, the marketplace is showing decreasing or declined implied volatility for Boeing shares, even though it has earnings coming up. What does it say about the options? A little bit muted. 43% for Friday's expiration, which gives us about a $13 up or down move. So where might that take it? From here down to about 350 or 360. So that's going to be the $13 move, takes it into the prior low. Anything above that would take it upwards of 385, roughly speaking. We'll of course see how it trades in the morning session. But that should move up or down in Boeing. So 13 up, 13 down. And Don's video last night does take into account the butterfly position or the butterfly play. For example, in all these shares, we're taking a look at the daily chart and looking at key levels, trends, trend lines, price levels, etc. And that can help in making decisions of to be a bullish upward expected move butterfly or a bearish downward expected move butterfly. And just with respect to these levels, if you don't trade the butterflies, which are giving you risk control and an opportunity to make some money off of the jump or the gaps, you can trade these on intraday movements toward or away from, mainly away from, these levels. For example, if Boeing opens down to 360, we might play long against it because that would be a price target and a bounce play, essentially an oversold market that hit its expected move. The same would be true for gapping up into resistance, potentially short selling on an intraday basis, Boeing shares. We'll talk about these later, but don't forget, big companies have earnings beyond Wednesday. So the main one we'll be watching, well, we'll all be watching different ones for our own accounts, but Amazon, that's going to report. That keeps a lot of bullish plays in motion. We're seeing that continue with a bull flag swing off of 1972. So 2000 is again in the sights of the market. What's the implied volatility? 48%. Similar to Boeing, you're not seeing a whole big increase in implied volatility that could imply complacency, or the market doesn't expect an enormous move. it's expecting, at least at this point, a $77 up or down move. We'll end with the logic or the cautionary tale of Netflix, because it went, we discussed this earlier, its expected move took it to about 340, but it almost doubled. It went well outside the expected move. And when you're that far away on the bell curve or distribution curve, you tend to see markets surprise people, trap traders, and then push in the direction of the lower probability outcome. So nothing's perfect, but these levels give guidance, especially on the intraday frame, butterflies, verticals, or any type of other position to manage your risk, maximize rewards. But as always, watch your earnings, expectations, price levels, and our implied volatility charts. Because after earnings, implied volatility drops like a rock. But always be careful and to be safe. This is Corey Rosenblum with your Theo Nightly video for July 23rd, 2019.